you can get crushed. So you got to be careful. Secret leverage every stock has. This is not advice, only paper trade fake. I'm not licensed, just a baboon looking at numbers for fun. Just watch for fun, talk to a real financial advisor for financial advice, and don't listen to a baboon that is just having fun, who is me. For example, we're going to be looking at the Microsoft stock. Important numbers. Price today of $500 some dollars. Last year revenue growth of 55%. Earnings per share, $13.50. Book value per share, $46. My stock price true value is going to be calculated by earnings per share times 10. And we're going to push it forward by 3 years of revenue growth plus the book value. 13.64 times 10, 55% growth. So we multiply by 1.55 3 times and we add $22 and we end up with true value of $529.58, which is actually fairly close to the value it is today at $513.58. So let's slow our revenue growth by 10% in the equation. So same thing, but we multiply by 1.453 times. That comes out to 415.83 plus our book value, $22 or $437.83. That is a 17% loss from a 10% change in the revenue growth. Already you can see that's a little bit leveraged. Miss earnings per share target by 10%. So we're going to do this again, except we're just going to change the revenue per share. 1127 instead of 1364 in our equation. Multiply it out to $419.68 plus our book value, which comes out to $441.68. Compare that to $513.58. And you can see how missing earnings per share target by 10% can wallop the price. That's a 16% loss, all from a 10% change in the revenue. Or $87.90 in the stock price because of a $2.37 earnings per share change. Not advice. Premium price. You are basically paying a premium price for the expected future growth in 3 years. If we take out the growth of 55% 3 times, then we end up with $158.40. That's if we're not considering any future growth. That's what I would expect the price to be close to. However, with future growth, it multiplies by 3.24 times the today value for our expected future growth value. If a business is worth 10 times its revenue, if invested money is worth 10% annually plus book value, then Microsoft is leveraged by about 3.24 times before multiplying expected growth. Put simply, you move a little bit of the value today, that moves a big bit of the expectation later. So it's like a lever. You move the lever a little bit here, and it causes the fulcrum to move a whole lot over here by 3.24 times on this stock. What does that mean for stocks? Volatility, price swings, finding dips and seeing profit areas, not actually buying or taking profits. This isn't advice. You can get crushed when there's a little bit change today as well. So you got to be careful.